everybody. Mike, J Wavy, Mark, Sam, Sioux Nation, what's up? Seg, Control Z, Idris Lar, John Doe, Lyle, Say, hang on, you guys are bouncing around. Forrest, what's up? Rob, Miss Tamika, always a pleasure. Good morning, everybody. All right. Normal sound, nice. All right. Give everybody a minute here. Hope everybody had a good evening. We just had the ECB press or the ECB announcement, guys. So they raised rates. Okay, so we'll see how that's going to affect the dollar here going forward. This wasn't unexpected, but we're going to see how this affects the euro and more importantly the dollar here. Then they have their press conference here at 8:45. So again, we're going to see how that's going to affect the dollar. So let me do this. See where that puts them. All right, so they bumped up right there. There we go. All right. So there's our first rate cut or rate hike coming down the pipe. Okay. There we go. Move you guys over. All right. Morning, Mr. Wealth. Morning, JC. Yeah, everybody's on that Knick train, huh? Just not a Knicks fan because of their battle with the Pacers years ago. Ty, good morning. RC, Al. Excuse me. All right. Okay. Well, let's get started here, guys. So starting off on news, we were just talking about this. The ECB just raised rates. Okay. Again, this wasn't unexpected, but they did end up raising rates. So we're going to have to watch the dollar closely today on how that's going to affect the dollar and then obviously trickle over into everything else. But going in here to 8:30, we've got PPI, core PPI, our unemployment claims. So that is a ton of news, okay, that can affect us here at 8:30. Now, you would think if these come in as expected or lower, you could see it as rates could be pushed out further into the future. But if they come in hot, then you could see the perception of those rates being pulled closer. So this is a really big deal. Okay. It's like our CPI yesterday. All right. And then we finish off the week pretty slow tomorrow. We just have U of M at 10 a.m. All right. So this is our last big news event of the week here. And then at 8:45, there's the ECB press conference where hopefully they'll give forward guidance to rate decisions going forward. So regardless, we've got plenty of stuff here before the bell. Good morning, Miss Amanda. We've got plenty of stuff here before the bell. All right. I remember that, RC. I remember that last year when you went to the 500 and then went to the Pacers game. I do. I remember that. All right. Now, so 8:30, 8:45, right? We've got news coming up here. Okay. So when we look at the Fed watch tool, it's still in December. All right. Our first rate cut or rate hike is priced into December. Okay. Now, what we're watching more importantly is how these percentages, because that's giving you the perception of what the market is thinking, right? So we'll see after all the news and everything this morning gets settled where these start falling in line. But as of right now, that rate hike still priced into December. All right. Okay. So there we go. So let's get to it here. All right. Not that. There we go. Okay. All right. So starting off with the VIX. Okay. Now there's a little, yeah, this is really tight here. And what I'm getting at is this. We had these April 1st. Now this is VX, the VIX futures, not VIX, the index. Okay. Um, this is the leading indicator for the U.S. indices. This leads, indices follow. All right. So from these April 1st anchors, okay, that's what we've been using. And let me go down to a smaller time frame here. So we have those April 1st anchors, right? And this runs inverse, right? VIX down, indices up, indices down. Now, trading view, you're going to have to look at the current contract, which is M is in Mary, M is in Mike, and you're going to have to just draw from the 23.95, okay? Because yours is going to look different. All right. We were drawing to these lows right here. There was our first pullback, right? Now, here's where it gets a little sticky. Did this hit the target? Officially not, okay? We hit the target here and bounced. Now, that April 1st lows to lows, this broke, okay? When we zoom in, we'll show you that. But if we draw to this next anchor or this next low, we didn't break it. Okay. So we don't want to misidentify a trend break. The VIX is ripping right now. We don't want to misidentify a trend break. And again, this short isn't going to matter unless longs break anyway, right? So let's give it a little bit more room, okay, before we call it broken. So April 1st or here, I'll give you the numbers, 23.95 to 17.55. Give it just that little bit of extra room. Again, is it important? Yes. But unless the VIX breaks longs, it doesn't matter, right? So we'll give it a little bit extra room here. Now, when we zoom in, here's the series that we're in. And the VIX is absolutely ripping right now. Did we have news come out or anything? I mean, it is absolutely ripping. So here's the series that we're in. All right. So from these lows on June 4th, okay, and you'll see this on the M contract. These lows on June 4th to this high on June 9th, okay? There's our pullback. This was Tuesday. All right, that has targets up here at these 22.15s. Those haven't been hit yet, obviously. Inside of that, right, we've got our next measured move inside of that, and that's what we're ripping off of right now. Okay, here was the first pullback. There we go. From these lows here at 4 p.m., 3:45, 4 p.m. Tuesday to this high right here. Okay, that was at noon Eastern on Wednesday. There's our pullback, right? And that target up there is right here, and that hasn't been hit. So we just leave the draw right where it is. Okay, and that's what it's coming back down into. Okay, and that's what it's ripping out of right now. So in order for this long to break, all right, which means we could fall back down in here to the second test of this larger move, that's a 68, round down to 65, subtract a tick, 60s. So we would need to break the 60s, okay? Trade 55. And if we trade those 55s, right, we could fall, like I said, all the way back down here. That would be a big squeeze on the indices. Okay, big squeeze on the indices. All right, let's see if this broke yet. It doesn't look like it did. No, it's getting popped right there at the short. So for this, obviously, to confirm, we're going to have to break that short from highs. But it's absolutely in an uptrend. VIX is absolutely in an uptrend. Okay? And that's how it's going to continue until it doesn't. All right? So any questions on where we are. Like I said, that larger short, don't get too trapped into thinking much of us moving that draw and unless we break longs. This is the trend. This is the trend right now. There's two draws. Okay. There's the larger one, which has a target right there. And then inside of that, right there, that's all we're concerned about. Okay, that's all we're concerned about going into the morning. Okay? Targets are above us. All right, so any questions on the VIX? How do you know to draw that inner move inside of that? Yeah, just say the rhyme. Trade support, right? Break the short. As soon as we broke the short, then you draw the long. So just say the rhyme, right? There was number one, target, profit taking, same anchor. There's number two, right there. We haven't hit the target, so we just leave it right there. Don't draw that long until that short breaks, right? Trade support, break the short, draw the long. Just like that. Okay? All right. Let's see what that says. Carg Island hitting Iran very hard tonight. Carg Island. Okay. I'm just catching up on the chat. All right. All right, sounds good. Okay. All right, so there we go. Any questions, guys? It's just those two draws right now. That's all we care about. Right? Pretty simple. Dario, good morning. Shaw, good morning. Nate, good morning. Scott, good morning. Let's see who else we got. Rima, good morning. Rob, I think I said hi to everybody. There's Paz. Dario, did you look up Bob Kavoyan? Miss Mary Rose, how are you? All right. Okay. Yeah, the mustache dude with the LA Dodgers hat. Yep. All right. Okay, so there we go. And as long as this keeps rising, right, no bueno for the indices. Okay. All right, moving on. Now, our financials are still in longs. They're absolutely in longs. Okay, bank is still in longs. This is what has kept the indices from absolutely waterfall sell-off. Okay, is our financials have been strong. If bank had joined this party with the dollar and the VIX, yikes, right? That is the only thing holding us up at all. Okay. Now, on our financials, remember these longs we had? Okay. Remember, this is bank. This is just an index. It's not traded. Okay. But when it's rising, that's a tailwind for the indices. When it's falling, that's a headwind. All right. But from our lows on May 15th to our highs on May 27th, remember that down there? All right. That was the target, right? And we went through that target. All right, so we draw an extension. Well, that extension broke. Can anybody eyeball what I'm getting ready to do? Because we've got a new draw now on bank. Can anybody see my next draw? Because something happened after we broke that extension. Something happened after we broke that extension. Yep, Dario, very good, made new high. Yep, so that can reactivate this anchor down here. Very good. So we made this new high, right? So we can draw this up again. We can extend it to that high. So now we've got support on bank right here. Now this puts us, okay, here's another quiz. This puts us in a what or what up here for our financials. Oh yeah, news just came out. Go see that. What does this put us in? And Straight up or not at all. Yep. Because but we got to go straight up or not at all in this extension. Because if we don't, the next support level we know about, right, even to be aggressive here would be way down there. Right? So we got to continue to hold these and continue to head higher. Because if we break, there'll be short setups that'll lead us into a much larger pullback. Very good. You guys are on it this morning. All right, let's see our news here. All right, what do we get? All right, PPI came in. That was a beat. Oh, month over month. No bueno. I bet they reforecast that because they were so off. So core, though, which is what is important. They just as I said that, they just reforecasted core. Forecast 0.5 came in at 0.4, but PPI month over month 0.7 came in at 1.1. Okay, it's still down from the previous. It's just not as low as forecast. Okay, now unemployment claims up a little bit. That ticked up from 220 to 229, and that actually is higher than the previous month or previous week. All right, so we had a 225. Now we have a 229. Again, their estimates off that every single time on unemployment. I don't know who they have doing the math on that, but they miss. They missed by 9,000 unemployment claims. They never hit that. All right. Okay, so we'll see. So that's a lot, guys. So we kind of have some cross opinion. I don't even know what the word is. Cross thinking here because we beat on core, big miss month over month, and then our unemployment claims are up. So we'll see what that does to our Fed Fund futures, again, which is the most important part of this deal. So you can see those unemployment claims going up as bullish, the core PPI as bullish, and then the PPI month over month, which there's not a whole lot of faith put in that one, as a beat. Now, on the jobs note, I wanted to point this out because this came up yesterday. On all these jobs reports coming out, well, come to find out that the World Cup is jacking with those numbers, okay? Because the amount of people that are going to be employed just for that are jacking with those numbers, okay? So just keep that in mind. Now, again, we don't really care. We just care how the market responds to it. But, all right. Okay, so we'll see. So we got the VIX bouncing off that long. Okay, now we're officially inside of those and everything. There goes the dollar. Just ripping. Unbelievable with the dollar. Will not stop. Okay. All right, so let's move on to the ES. All right, so here's where we are. So on the ES, we've got these shorts from highs, right? From June 2nd, right? We've already traded these. Okay, there's number one right there to a target. And this was the next pullback right here. Didn't quite make it. So we haven't officially gotten back up there and completely back and filled this thing yet. Okay, so there's still room. Now, this short from highs, yes, it looks like it broke. Well, it didn't on that. But if you draw it to the low, if you equate it exactly to the VIX, it didn't break. Okay? If you draw the exact lows to highs on the VIX, you draw it from time, you draw the exact highs to lows, it didn't break. Okay? So what we're going to watch here going into the morning, all right, so the gap fills down here at 72, 76. All right, here's 10, here's 20, here's 30. So now we're within, well, we're within 20 right now. So we'll see where we open up at 9:30. And if we open up between 20 and 30, right, then we're going to have, then we've got about a 70% chance of filling this full gap. If we open outside of 30, okay, at 9:30, then again, we've got a higher probability of trading away from the fill and the indices going into a squeeze. Okay. All right. Got lucky with the news. That's a slippery slope, Dario. Um, all right. So I'm not really drawing up this long from lows. Okay, not really drawing that up. You can see it's defending, obviously. And there's going to be something there. There's always something at halfway back, guys, whether it's a short or a long. There's always going to be participation at halfway back. But I'm not drawing that up because that's counter trend. And this, well, we'll watch this. This is, no, that hasn't broken. So if you really want to, and you want to live dangerously here, what I mean by that is everything, this is all counter trend. You can look at, what the hell? Get on there. There. Okay. You can watch this. Okay, now that is like standing in front of a train, right? Because everything is pushing higher. All right. But if, it's a big if this holds and we start to see it sell off, okay, now it's probably not going to go down here like butter. It's going to struggle bust its way down here. But if we can't break this, that's no. Oh, I hit the on-demand button. Hang on. Don't do that. Get off. No, oh my gosh. Get. Thank you. Okay. If that holds, you've been in since 3 a.m. Forgot about it. Nice, Dario. Sometimes those work out in our favor, right? Oh, you like that sim? There you go. If you want to gamble, go to Vegas. More fun, you get a free buffet. The order that actually worked that we forgot about. All right, so right now, I mean, obviously there's a reaction there, but what that is this right there. All right, and that's absolutely fighting the fill this morning, and we don't want to fight fill. This is really interesting because here's 30 points, and we're trading this pre-market. So if this long squeezes us above these 30 at 9:30, the indices could absolutely squeeze higher, squeeze away from the fill. Now, keep an eye on the half, because if we do open up out here and, that would put the half somewhere in here, keep an eye on the reaction of that half if we do start trading towards the fill. I never talk in 100% when it comes to the markets, but I 100% advise everybody all the time, take at least something at the half. If you're trading the gap fill, take at least something, right? Because there's going to be a reaction there. It's just a matter of how much. Okay. All right. So we'll see going into the morning here. Okay. So moving on to the NASDAQ. All right. Now, here's the NASDAQ too. So these shorts from highs have broken. All right. Boom. Now, I guess I should show you the larger move. The larger move is the same as the ES. All right. There's our all-time high. There's our pullback. Bang. Boom. Target. Pullback. Right. And you can see we haven't back and filled all the way yet. Right. We know indices love to come all the way halfway back on the way down. Okay, so we'll see. Now, same thing, we'll watch that VIX short, right, from that overnight lows to highs, overnight highs to lows on the VIX, right there. We'll watch that going into the morning. More importantly, watch the distance away, right, on the gap fill for the ES. So just let the ES gap fill and the VIX be your guide. But that is a reaction. That's no joke right there. That's a reaction. All right, so we'll see. All right, now, look at that. Man, okay. I'm not going to argue. All right, the YM. Okay, we talk a lot about how the YM is the most technical instrument of the indices. Uh, just amazing, right? Coming off of our all-time highs, the same draws, right? There's our pullback, boom, boom, target right there, bounce, right? Same anchor, new low, get there. Almost got there. Okay, look at that, target, bounce. All right, there's your next pullback. Okay, way up here. So see the YM's got room. All right, we're going to watch the same thing. If that big short holds, all right, if that big short holds, there we go. Okay, and watch bank, right? Because the YM and the Russells are the most sensitive to banks movements. So bank does open up and continues its uptrend. It's going to add a big tailwind to the YM and the Russells. Okay. All right, so really interesting here. All right. Now, the Russells has actually held up the best of all of the indices. Okay. Main reason is bank, right? Because bank is in that nice uptrend, and that's that big. This is, if you're looking at bank sensitivity, Russell's 1, YM 2. Okay. So if bank continues in that uptrend, Russell's squeeze back into these highs, right? Now, we were in this range, boom, 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 boom. Now we've got a bigger range. The Russells does love ranges. We laugh about that, but if you go back and look at history, the Russell is just a rangy Rangerton deal. Lots and gets stuck in lots and lots of ranges. So, I mean, if you go back and look now, I want to show you. If you go back and look at, or is it 20? There it is. Look at this. Look at this range. That was from June of 22 to October of 23. So year and a half almost range. Okay. So been in this nice uptrend. There'd be nothing surprising about going range bound again. So there's where we are right now. Okay. So we've got bottom of the range, top of the range. All right. That's good, Ed. That's good. Now I got the song in my head. You know what the song I have in my head is, the Wookin' per Nub from Eddie Murphy. When he was buckwheat. I don't know if that fell on deaf ears, but the Wookin' per Nub when buckwheat does the classics. Yeah, that was good. Did you? Yes, you missed the VIX, Ed. That was 30 minutes ago. All right. All right. Okay. So we're starting to wedge in here, right? Higher lows, lower highs. We were talking about this yesterday. So we're going to need banks' help. Okay. We're going to need banks' help here on the Russells. So we are smack in the middle of this thing right now. We've broken shorts from highs. So is there a long from lows? There could be, right? But again, that's the middle. That's right in the middle of this nastiness. Okay. So wouldn't be surprised if we just continue to make these lower highs and we make these higher lows. Okay. And just get tighter and tighter and tighter in there. Okay. All right. Okay. So there we go. VIX bank indices. Any questions? Man, did the VIX get popped at that halfway back short? Wow. All right, we'll see if that continues. Any questions, guys? VIX bank indices? Everybody good? We'll see here get towards the end of the call where the ES is in relation to that fill, and that will give us our insight. All right. Okay, moving on. Bitcoin going nowhere, playing in the dirt. Okay, still down here, not doing a whole lot. Just hanging out. Most aggressive short we've got above us is from, that was the 29th. And remember, on spot, we have a low right here that's an extension short. You can't see it on the futures, but it's about at the same spot. So we can draw from that high. That is 74,535 to lows. We can't even make it up into that. Okay. So nothing to do here. Nothing to see here, people. This is just playing in the dirt. There's nothing down there. Absolutely still in shorts. Big time. Okay. All right. Now, crude oil. Let's see what that news did to crude oil. Little pop. Okay. This is getting sloppy. All right. So we had our dip into our lows at the bottom of this range, right? We redefended. We went over that yesterday. We redefended the lows, and there's our screen. We haven't made it back to the top of the range. But this wedging into, you can see it, lower highs, higher lows, just getting tighter and nastier and nastier and nastier in here. Okay, so we want to trade the edges, right? We can trade the extremes, we can trade the top of the range, we can trade the bottom of the range. Everything in the middle is getting cooked. Okay, so stay out of that nonsense. All right, everything in the middle here is getting cooked. Shorts from highs, longs from lows, everything's getting cooked there. Okay, so we want to trade these extremes. So we'll see as we go into the morning what that news. Obviously, we've got geopolitical stuff going on, so we'll see what that does to us. All right, now gold and silver. So gold. All right. Now I want to point this out because looking out into the future. Okay. This monster extension long on gold. I don't know if you can see this down here, but that's from August 1st of 2000. Sorry, August 15th of 2011. Okay. So the more a 61.8 gets tested, the weaker it gets. No, the way you look at a level like that is the second test is the dangerous test. Okay, first, think of this rhyme. First test is the best. Second test is the dangerous test, meaning it can go through. But if it's been tested twice, market considers it a support or resistance level. Okay. That's how we look at it. Okay. All right. The times of maybe. Yes, thank you, RC. At least somebody caught that. My buckwheat reference. Yes. What was that rhyme? First test is the best. Yes, that was a rhyme. First test is the best. Second test, the dangerous test. You put that into a song. Anyway, November, what the hell? August 15th, 2011 to highs. Remember this extension long? We've never traded it. Okay, we got front run the first time. Didn't break through the short. So now we're coming down. Okay. So just looking out into the future, if we get down here, guys, pay attention. Okay. So we'll see. Anything below us is going to have to break short setups. And here's the extension short that we're in right now. Okay. From this low on May 28th, all right, to lows. So you can see it's got plenty of room to make a pullback. It's just the dollar's killing it, right? So we'll see. But right now, absolute downtrend, but that would be the squeeze that we'd be looking for to see if it's either going to break or roll back over down to targets. Okay, so it does have room. We'll see. Now, silver, a little bit of a change on silver here. Not much, but we were using this low for an extension. And kind of went back and looked this morning. This is like straight down, but there was this traditional here, that kind of this weak pullback, and then there was the target, and we've gone through that. So we're going to use this low. Like I said, it's not very much different than what we were using, but it just kind of goes along with the larger trend a little bit better. So use that low on May 28th. Okay, lows to lows. So you can see silver's got room to pull back as well. Are we going to develop these counter trends that are going to lead us up there? I mean, we're trying, but we're trying to build these counter trends to lead us up, but we'll see. That's a dangerous draw right there, right? Okay, so gold and silver have room. Now to the dollar, the most important deal here. Okay, DXY just screaming right now. This isn't the dollar, has nothing to do with the dollar. This is a bunch of different currencies in an index. All right, but normally, right, the way it's set up is if it's rising, that's dollar strength. If it's falling, that's dollar weakness. All right. So if you do watch the DXY, just understand it can really lie. It's not good at all for really being professional about determining dollar strength and weakness. All right. So let's look at the dollar yen. All right, this is just what's killing everything, this dollar strength. There we go. All right, and you can see it's just absolutely going up. It just won't stop. Like this series of measured moves is absolutely insane. I haven't seen something this technical in a long time. Okay, here's our next long right here from our lows on. That's good. The dangerous draw. That's good. From the 9th, what is that, Tuesday, to our highs, that's our next draw. If you walk this up, there's draw, 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 right? So this is our next one. It's traded. There's the target. And inside of that, we won't even break these little guys. We won't even break these worker bees. It is just straight program buying. Insane, right? So that's what the dollar looks like right now. Okay, this rising, dollar strength, falling, dollar weakness, unless the euro's going down with it. Don't have to worry about that quite yet, but as always, keep in mind that if you see the dollar yen falling with the euro, way bad news for the indices. Okay, all right, so there we go. This would be any sort of a sign would be this breaking. Okay, all right, now onto the euro. So here's the euro. There's its next pullback from our highs on May 29th to our lows June 8th, right? Traded right back up in here. We got front run to 68 or 68.2. That's a new number. 38.2. Okay, right here. All right. Again, we never actually got up here and traded it, but we can watch to see if, here's the next. There's the next short setup right there. All right, didn't break. We could probably call that hit and just start trailing these highs to lows. All right, for any sort of continued dollar weakness trade, we'd have to break those, right? We'd have to break those. If not, we're going to hold them and continue to sell off from these levels, okay? So this rising dollar weakness, falling dollar strength, all right? That's going to affect obviously the precious metals the most, but also as well, it'll put headwinds or tailwinds against the indices. All right, so on the VIX here, all right, here is your battle over the trend right now. Right there. Okay. There's your battle over the trend. All right. This breaks, we can fall back down to lows. This breaks, we're taking off. Okay. You see that little long from lows right there holding, and that short from highs. So there's your little battle over the trend. All right. So let's see where we are in relation to the fill. All right. We're outside of 30. As of right now, we're outside of 30. Look at that rip off that long. That is something. That's something. That's that VIX short, right? Now, I don't even want to draw this up because it means zero, because it's that VIX long. So we'll see. We open outside of these 30, right? Definitely keep an eye on the half. But that gives us a higher probability of trading away from the fill today. Okay. This is the most bullishness, this one move. That's the most bullishness we've seen on the indices a while, right? And we've got room to squeeze. Remember, indices love to back and fill all the way. Well, backing and filling would be all the way up here at these 74.39s. Okay. Is Amanda being snooty? I don't think so. Amanda's always running now. Amanda's a running fool. She's been killing it. Even I love my favorite little thing you sent out, Amanda, was I don't want to be here. I did not want to go to this today. Neither one of us wanted to go to this today, but here we are. Well done on that one. I like that. Following through in spite of how you feel. That was cool. Yep. Do you remember that one where you're sitting in your car and like, I didn't want to go. I didn't want to be here, but here I am. Right. All right. Same goes for that ES long. Yeah, I mean, this is the second test is always a dangerous test. So if we come back down and retest that low and the VIX is rising, that becomes a dangerous test. Yep. All right. Okay. All right. Any questions, guys? James, what's up? Idris, what's up? All right. Exactly. There you go. Forcing yourself to follow through in spite of circumstances. All right. That builds that self trust. All right. Long time ago, there was a quote in our high school weight room that said, "You don't get much done in life if you only work on the days you feel like it." And that stuck with me ever since. Don't get much done in life if you only work on the days you feel like it. All right. See the VIX again. No, Edward. Yeah, see, sassy. Exactly. Very good. You put him in his place, Amanda. All right, there we go. This is all we're really worried about today, Ed. Are these two draws right here? This long from, what is that down there? 1690 to 2115. That has a target up here. And then the smaller move inside of that one, right? You can always delete these. It's getting a little messy. From 1881, great year, to 2105. All right, right there. That hadn't hit its target yet. And that's what we're bouncing off of. All right. All right. Sounds good, everybody. Purple Panda, what's up? All right. Some more people popping in. What up, everybody? All right. If you guys got any, that too. Luke, what's up? Ken, Chris, you guys got any questions? Let me know. But we're in the clear for news now. Let's have a great day. All right. Thanks, everybody. You guys are the best. Tyler, you got us? Tyler? Okay. Well, I got to jump off, guys. All right. Thanks, everybody. Thanks, Mary Beth.
What up, Zach? Oh, you're good. Hello, everybody. I'm just gonna get Zach on. We'll be on in 1 second. Just give me 1 minute. See, I was just sending you a message, and he was gonna tell you this. Zach and I are on. It's up to you. Maddie can't make it. You can totally come. I was like, I didn't see his story. I think Celie saw your story, Zach, where you're like, I'm not trading tomorrow. Yeah, that's cool.